Hi everyone, it's November 21st, Saturday afternoon. I wanted to do a video of an article I read from the Journal of Accountancy called "The IRS Doubles Down on the Non-Deductibility of PPP Funded Expenses." For those of you that received a PPP loan, what that basically means is the IRS is not going to let you take the expenses as a deduction. So to put this in real world terms, say you got a PPP loan for $100,000, you paid all of that $100,000 out in payroll, and you live in Tipton County, you're in the 22% tax bracket, and you have to pay state taxes on it, you're looking at 28%, okay? On the $100,000, you used it all for wages. You paid it all out. However, you're gonna have to pay tax on that. So you're gonna be out the $100,000, and you're going to have to pay the IRS and the state $28,000. I don't think it was Congress's intent to do that, but in this video we're going to look at why I don't think that, basically a commentary of why I think the IRS is categorizing this incorrectly as tax-exempt income or loan income, or should it be a gift, a grant. It's very much a technicality, so let's dig into it. Late Wednesday of this past week, IRS issued a Revenue Ruling 2020-27 and also 2020-51. 51 is a safe harbor revenue ruling. The difference between a notice and a revenue ruling is a notice is from the IRS saying, hey, this is what we think. With a revenue ruling is, this is what we think and this is what we're going to do. And this is what we're going to follow. So these have some foundation to them. And we're going to dig into 27 and what's going to happen with that. So that gives two scenarios with the PPP loan. Number one is, say you spent your money, you got it, you did your application, and you got it forgiven. They're saying the expenses are not going to be deductible. In scenario two, they're saying you spent your money, you filled out your application, but you don't know by the end of 2020 whether it was forgiven or not. They're saying there's a pretty good chance that you know it's forgiven, so the expenses aren't deductible. It takes 8 pages to describe that. It goes into some court cases where they're using that as a foundation for their argument. I think they're kind of slim, but it all goes down to how we're going to classify that income. So the AICPA believes the IRS's interpretation denying deductions of expenses forgiven under the PPP program is contrary to Congress's intent. Well, to get Congress's intent, we have to ask the congressman, but let's dig into the CARES Act itself. And in the CARES Act, section 1106 digs into the actual payroll protection program. And 1106B talks about forgiveness. And I'm just going to read that straight from the CARES Act itself. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in an amount equal to the sum of the following costs incurred and payments made during the covered period. So, are you eligible for forgiveness? Yep. 1106 further goes into subarticle I, taxability of that forgiven loan. Again, this is straight from the CARES Act. For purposes of the Internal Revenue Code of 1986, any amount which, but for this subsection, the CARES Act, would be includable in gross income of the eligible recipient by reason of forgiveness described in subsection B, we just read that, forgiveness, shall be excluded from gross income. So from there, we're not going to include forgiveness of the loan in gross income. That goes into IRS Code Section 61. What in the world is gross income? Basically, what we've told clients to keep it easy, it's everything is gross income. It's taxable unless the IRS tells you it's not. In Code 61, they define it. And except as otherwise provided in the subtitle, gross income means all income from whatever source derived, including but not limited to the following items: So it talks about interest income, rent, royalties, dividends, annuities, income from life insurance, pension, and here's the kicker right here. And this is what we're going to talk about. Income from discharge of indebtedness. So some of you may know, or you may not, that if you have a loan with, say, a bank, let's just use Chase credit card, for example, and you do not pay that credit card and Chase forgives it, they send you at the end of a taxable year a 1098-C, which is for cancellation of debt. Cancellation of debt is income that you have to report on your tax return and pay tax on that income of you didn't have to pay your loan back. The CARES Act we just read isn't going to do that. It's not going to put it in gross income, okay? They do that, or the IRS puts cancellation of debt on income from section 6050P, which is titled Returns Related to Cancellation of Indebtedness by Certain Entities. Okay, any applicable entity which discharge in whole or part the indebtedness of any person during the calendar year shall make a return at such time in such form as the secretary may be regulations prescribed setting forth. So it's going to discharge that and then add it back to income. So that applicable entity is the bank you got the PPP loan from, and they're going to discharge it. That requires the IRS to tell that bank, hey, you now need to send a 1098-C because of the gross income. It's going to be added. Here's the kicker. The IRS in September of 2020 issued announcement 2020-12 telling the banks do not send the 1098-C to any PPP loan recipient that has been forgiven. The reason being is they said it's going to confuse people. This is straight out of the notice. This announcement is intended to prevent any such confusion of whether it should be taxable or not, okay? I'm going to read this paragraph too. When all or a portion of the stated principal amount of a covered loan is forgiven because the eligible recipient satisfies the forgiveness requirements under Section 1106 of the CARES Act, applicable entity, in this case the bank, is not required to, for federal income tax purposes, file a 1090, in this 1099-C, I've been saying it wrong, information return with the IRS and provide them that form under code section 6050P of the code, which we just read. The filing of such information returns with the IRS could result in the issuance of underreporter notices, which is a IRS letter CP 2000, which is a computer notice, to eligible recipients, and furnishing of such payments of eligible recipients could cause confusion. Next sentence, the announcement is intended to prevent such confusion. So is it cancellation of debt? No, it's not. They're saying it's not includable in gross income, but they're saying, yeah, we agree with that. It's not. Where they're sticking you and sticking a lot of small businesses at is it tax exempt income, which technically by their standards it is. And they're utilizing section 265 under the code that says tax exempt income, you can't take deductions against that. Which effectively, if you have a $100,000 PPP loan and you're not allowed to take the deductions of that PPP loan, it effectively makes it taxable. Let's go back to the 1106I of the code, or of the CARES Act. Shall be excluded from gross income. So we've concluded it's not in gross income, but they're working it backwards and making this thing taxable. Again, you're a small business, say you're a restaurant, to pick on those. A restaurant has been affected by the pandemic probably more than any other industry, and they're still affected today. Restaurants make their money by square footage of getting people in the door and sitting them down, okay? A lot of people know this, and also a lot of people know that restaurants operate on very thin margins, okay? They probably don't have a lot of working capital, a lot of cash reserves. So when they got this PPP PPP money, it was a huge relief to a lot of them that they could still employ their workers and get through the shutdown in the spring. What they did was they spent all the PPP money. They spent all $100,000, still running on thin margins. And when the IRS is telling them, hey, you've applied for the forgiveness, you better put it in there as basically you can't take the expense, okay? If you're in the 22% tax bracket, and if you're in Indiana, I'm assuming Indiana's going to tax it too, because they go off federal adjusted gross income. You got 28%, and you're going to cough up $28,000. Let that sink in. A lot of clients have them all over the board, from upwards of over $200,000 PPP loans to as low as I've seen $11,000. It's going to affect everybody, but those are material figures that I feel, boy, I don't think that was Congress's intent. This all started in April when the IRS issued Notice 2020-32. When I talked about notices versus revenue rulings, again, notices are just, hey, this is what we think. The IRS has been doubling down with this current article. They're saying this is taxable. And it's taxable under a code section 265, expenses related to tax-exempt income. So they're saying it is income, but they're saying it's not a loan. So quite frankly, I'm confused. What is it? What was Congress's intent? And it's a technicality. They're saying expenses related to tax-exempt income, the non-deductibility of expenses allocable to exempt income. No amount shall be allowed as a deduction under any provision of the code for any expense or amount which is otherwise allowable as a deduction and which is allocable to a class of income of exempt income. I would significantly argue that this PPP loan was not a loan, and it's not tax-exempt income. It's a gift from the United States Congress to get us through that pandemic. So a lot of you be thinking, well, that's all fine and dandy, Zach. What in the world are we going to do? And I'll agree with you. I don't know. My clients, we're gonna put them on extension and see what Congress does. Hopefully Congress intervenes and does something. I know based in talk about April and also in the fall, I read articles that congressmen did come back and say, hey, this wasn't our intent. So I ask people that are watching this video, small business owners, that don't want to pay tax on this money, don't feel that they need to write their congressman, both senator and congressman, to see what can happen. It's a big deal. And I want the IRS to stop. Stop in the name of love. That's the Supremes, right? So we can stop going down this highway to hell of 2020, AC/DC, good tune, right? And so we can start thinking about tomorrow. Don't stop, Fleetwood Mac. So I think I'm going to try to put the numbers down for congressmen. I'm going to write them. I'm not going to be just a YouTuber here. I'm going to write the congressman, because I don't think this is correct. I think Congress doesn't realize, maybe the IRS doesn't realize, that over 50% of the United States gross domestic product is from small business. It's not from huge companies like Amazon, Exxon, and all those. It's from small businesses that we serve. So if you get anything out of this video, know that your main intent right now is not to rush to get your PPP loan forgiven. It's to get with your congressman, write a letter, call them, and to say, hey, this isn't taxable. It shouldn't be. So those are my 2 cents. If you have any questions, get with us at Logan, Graham & Connor Accountants.